ETFs, or exchange-traded funds, let you invest in a whole group of companies at once. One share of an ETF could own hundreds of stocks. Think of an ETF like a shopping basket. Instead of picking each stock one by one, you buy the basket, and that basket already contains many of them. ETFs trade on the stock exchange just like regular stocks, but they're built to track something bigger, like the S&P 500 or a specific sector. For example, when you buy one share of the S&P 500 ETF, SPY, you're actually investing in all 500 of America's biggest companies. So if Apple, Microsoft, and Amazon grow, your ETF grows too. And the best part, you don't have to track or manage them individually. ETFs are one of the best tools for passive investing. You can start with small amounts, build a diversified portfolio instantly, and pay almost no management fees. So here's your challenge. Look up one ETF today, like VU or QQQ, and see what companies it holds. To recap, ETFs are a simple, smart way to invest in many companies at once. If you want to build wealth long-term without stress, ETFs are a great place to start. Subscribe for more Lightboard lessons on money, investing, and business. And as always, thanks for watching.